the life has not changed much in the sense that the strategy part, the overall outlook of the business, and the confidence in the Indian market still remains very, very bullish and up. Now, on the management side, as you see, Shrikhant is now the new MD and CEO of the company, and I move into as executive deputy chairman. I have been in this company for over 25 years, so the continuing with the organization and guiding on strategy and other things which Shrikhant and we will work together. Now, this is the only change that has happened in the light of change from Adani's exit. But otherwise, from company point of view, the business point of view, the growth strategy, investment strategy, everything remains robust, and we are going ahead with all the plans that we had.
All right, take that point. Shrikhant, so in that case, welcome as the MD and CEO, your first interview. Important to know then what your strategy would be, how would it be any different or plus from what has happened earlier, if you could give us a sense.
I think as we go further, I think the top priorities for the company remain same what we were driving earlier. I think the food will remain the top priority for the company. We will want to grow the food to a sizable level. We are already a 1 million ton of food basket today. As we go further, we would certainly like this business to grow in a double digit as next couple of years, number one. Number two, of course, the distribution again remains on the top of our agenda, because today with the 2 million outlet coverage, we are still reaching at close to 50% of the universe that we would cover. So distribution has to be there. And there's a lot of potential even now to grow. And as we go forward, I think everything, all the growth which we see will be a distribution-led growth that we will see. And third, and of course, any CEO would like to drive, of course, the expectation from the investing community as well as the promoters is to consolidate the margins as we go forward. So these are the three top priorities that we would be driving as we go forward.
All right. Hi, gentlemen, and welcome, Shrikhant. First of many interactions. As you said, food and FMCG, that has tremendous potential. And there are various touch points that you would like to go to. That said, as a percentage of the contribution, where is that headed? What's the timeline that you'll be looking at? And, if you could help us out in terms of the margin outlook. Once investments are complete, what should the broad range be?
Yeah, food, and I think we started our food journey sometime in 2015-16 with rice, and then we added wheat flour, then we got into a besan, nuggets, poha, and so there's quite a long tail now we have in our food basket with a varied margin structure. So as we speak today, our food is contributing close to 20% of the volume in overall scheme of the things, and it's quite a sizable volume rather, I would say, as I said, 1 million ton of food basket today. We would certainly want this to go beyond 25%, and that's the something which we are working on, because the more food gets into the system, it to some extent also de-risk your oil risk or a commodity risk which we run on the oil side, number one. Number two, on a margin fronts, I think food certainly has got a better potential to have a margin as compared to the edible oil. Today it's by design and to some extent an EBITDA neutral business, because we are today in food in the investment and the growth stage. I think in the next couple of years, we would reach to a level where we will start consolidating margin as far as the food is concerned.
If you could give us a sense, Shrikhant, how much a 25% volume contribution from food would turn into revenue contribution, because food and FMCG account for just 10% in your revenues right now. You said that you are looking to decommodify your business, but even in the categories that you're present in the food business, most of them are commodities, right? There is rice, there is soya nuggets, all these products that there are, pulses, etc. They're all commodities. So how do you decommodify that business? Are you looking to get into prepared dishes and things where the underlying price of that commodity does not matter as far as the user price is concerned?
So to answer your first question, what kind of level we are looking at in terms of the revenue, I think of our target, we have been saying this for quite some time. We want to reach to a 10,000 crore of revenue once we reach that 25% kind of volume. And I think that should happen in next 2 to 3 years, number one. Number two, when I say decommoditization, I don't mean to that. What I'm trying to say is, since the food is less volatile as compared to the oil, so therefore more food gets added to the basket, you are de-risking the edible oil risk.
All right. And just a couple of questions before we wrap it up with Angshu. Shrikhant, just tell me, you said you want to increase your distribution touch points. You're currently at around 9 lakh stores. What is your target over the next 2 to 3 years? And rural, it's about 31% of your revenues. What's your target here? Quickly.
Yeah, so on distribution front, we reached to close to 2 million outlets, direct plus indirect. Direct is close to 900,000 outlets. We would certainly like to cross this 1 million as a target by end of this year, number one. And on the rural side, of course, today we are reaching to close to 50,000 towns, and the rural contribution is close to 31. We want to make it to 35% by next couple of years. That's the target which we are running on the rural side.
All right. And Angshu, finally, on the larger part of your business, edible oils, if you could give us a sense on the remainder of this year, how's demand been? What's the kind of volume growth you're expecting? And given the sort of price changes, what's the inventory that you're sitting on? Should we see margin improvement from here on or margin reduction?
On edible oil front, we have seen at the India level, the domestic consumption has actually flattened and has not grown. Whether we look at Kantar reports or Nielsen, both are saying the same. We also see hardly 1% or 2% growth. Now, why is this happening? Possibly one, there in edible oil, if you see the price last year versus this year, you will find it's almost 25 to 30% higher. That has impacted the purchase at least at the rural or smaller towns. We have also seen the pressure in the metro cities. Going forward, the prices are likely to remain stable, and at these levels, consumers are getting back into normalcy. And we see this quarter, October, November, December, sales are picking up as compared to the first half of the year. Now, from a company point of view, we have started working on creating some premium brands and premium products, because we see there is a consumer which is looking at cold press oil, they are looking at first press oil, they are looking at organic products, and they are looking at expert solutions to their problem, whether it is sugar, high sugar problem, or there is cholesterol issues. So they are looking at it, and we have Fortune Expert oil, and we have 2-3 products on it where we find the sales are now improving, particularly in the e-commerce chains.